We're back.
We're back.
Today we're going to talk about a topic that affects you and I personally,
Okay.
which is how insurance premiums can kill a real estate deal. And I think a lot of people are watching are probably affected by this also if they're planning on making an investment to buy a property, whether it be commercial, residential, because insurance premiums in California, specifically Southern California, are insurance on a property it's a challenge to get. And would you buy a property without insurance?
No.
So you kind of need it. There's, I guess, ways around it, but you kind of need it. Now, you have 40 years in the insurance industry as an owner of insurance company, and we're also real estate investors, and you're a broker, real estate broker. I'm an agent. So we're trying to put deals together for clients or even for something that we're looking to invest in, and we're having a hard time getting insurance.
Mm-hmm.
Or what you would consider adequate insurance. What do you think that is caused by?
Well, we've had a tremendous amount of fires. If you're talking about California, California's been hit with a lot of fires, and they've cost the insurance carriers a tremendous amount of money. And so, they've pulled back. And they're either leaving the state or curtailing the business that they do in the state by making their underwriting guidelines, more stringent, And without pointing fingers or blaming this person or whatever, there's a multitude of reasons why these fires have occurred, okay? Whether it's the state's faults, the utilities' faults, this and that and whatever, there's a multitude of reasons, okay? And so the insurance carriers have been hit very, very hard, and they're pulling back. That's simple.
And so they're either not offering insurance anymore for specific properties or making it very difficult or expensive.
I can give you a quick example.
Yeah, please.
On a very, very simple 4 units, okay? I started getting the insurance, and once I bought the property, I was paying $4,000 a year. Okay? There were a few things that I needed to do after the insurance came out to inspect it that I had to spend money on in order to be compliant with that particular policy and not take the risk of them canceling that policy. The few things that I needed to do ended up costing me somewhere around $9,000 to $11,000. So after you buy the property, I had to put somewhere between $9,000, a little bit over $9,000, in order not to lose the insurance policy that I had obtained, okay, which was with a preferred carrier. On the renewal, okay, they canceled me.
Wow.
Okay, and I had to go get another insurance carrier. So I went from $4,000 to $7,200.
What was the cause of them canceling this specific policy?
This particular policy fell out of favor with this carrier because of the age of the policy.
Of the building, you mean?
Excuse me, of the age of the building, yeah. They had revamped their underwriting guidelines or whatever, and so this particular property fell outside of that quadrant.
So in a year, you went from $4,000 a year insurance premiums to $7,000 a year.
$7,200. And then,
that's a huge difference.
It's a huge difference, but it's not over. I'm going to give you the ending real quick, 10 seconds. Now I just renewed like 4 months ago, and I can no longer get that policy for $7,200. It went up to $9,000 9,300 or 9,172 something. Now I'm paying $9,200.
And this is
4 units. A very simple 4-unit structure.
wow.
So I went from 4,000. In 2 years' time, I'm paying over $9,000 just for the insurance. And mind you, I dropped another 9 or 10 to improve the property just to make it compliant to that insurance carrier. I'm not counting additional maintenance that I have done to that property.
Okay, so one might be listening to this and think, well, then I'm just not going to invest because it's a very costly thing to get insurance on these properties. And it's going to continue to go up. So maybe I won't invest anymore. With this having happened to you, are you still investing? How are you working around this?
So I've always been a firm believer of real estate. I come from Cuba where Castro took everything my parents had. And so when we got here, it was like landing in the promised land. And my dad said, hey, you can buy property here. There's no Fidel Castro here that's going to take the property away from you. So I am a firm believer in investing in real estate. So I will continue to invest in real estate. I'm not going to stop. However, I'm going to be a little bit more cautious when it comes to insurance, because insurance now is taking a bigger bite of the whatever return you've got. So you've got a finance. You have to finesse your numbers. You have to go back to the table and look at it slightly different.
Yeah.
Because I remember that as an insurance broker, I would get a call from escrow and say, hey, we need this policy and we needed it yesterday. And it was no problem. We could get the policy. What I am suggesting to people nowadays that are buying properties is make sure you contact your insurance agent right away.
Well, we can use as an example a deal that we're looking to invest in, a commercial real estate deal.
Mm-hmm.
We haven't even opened escrow yet, and you, from the very beginning, were looking to get a quote on insurance because you knew it was going to be an issue.
Yes.
Sure enough, it's become an issue. We have not been able to get an insurance quote. I think maybe one maybe came back as a basic insurance on it.
There's too many ifs on it. So that quote that came in, we don't have enough information to say, okay, this is an actual quote.
Okay.
The company wants to know if there was an electrical update, if there was a plumbing update, if the roof was updated. So this is, the way I look at it is like the blind leading the blind a little bit, Mike, because we got a quote. But there are too many variables that are not falling into the constant stage.
Right.
We can't verify certain things yet. And it's not because the seller is a fantastic person. The person that's representing the seller is a fantastic person. It's just the state of, the state of the circumstances that are everybody facing today.
Yeah, I think you brought up a good point that it's not stopping you from investing.
No.
But you are more careful in analyzing that portion of the calculation, because whenever you're purchasing an investment, whether it's a commercial building that you're going to occupy or it's a commercial building that you're going to lease out as an investment, you have to look at what is my payment on this, for what are my expenses. So we usually try to look at somewhere between 30-35% in expenses of the income that it generates. So for example, property taxes, you have to take that into account. Insurance, maintenance, utilities, all of these things are going to take away from the revenue that property is bringing in. And if you don't properly calculate insurance, like yesterday, an investor that we work with, we're trying to help him find a commercial building to occupy. And he's saying, roughly, what do you think the insurance is going to be on this 2,000 square foot building. And it's hard to actually give them a real number. Because I have an insurance background, I grew up in an insurance agency with you and Mom. I have an idea, but it's changed so much. There's so many factors. So before he even decides to look at these buildings or maybe even make an offer, he's already got to have in the background the insurance quote. And the reason that I think it's important to cover this topic, because the insurance can potentially kill a real estate deal, is that we want things to continue to move, people to invest. We want the economy to move to get a good return on your investments and all that. But it is a challenge when you're getting insurance quotes that are extremely high, or there's not just a lot of options.
Right. And we started the podcast by saying it's Southern California and California.
Mm-hmm.
The insurance crisis, just so that you all know, folks, is throughout the entire United States. Every state has their own issue. Florida has issues with flooding, hurricanes, okay? Their insurance policies are going through, substantial reevaluation and increase in prices. So there goes, for Florida. You need to call your insurance professional when you open escrow. Or before.
Yeah.
Like we did it. Do it before you open escrow.
Yeah.
And try to ascertain what kind of a value. For example, throughout the entire United States, there are multiple apartment buildings in New York completely vacant. Okay? Completely vacant. And that's not necessarily the result of the insurance, but is the result of ordinances that have been passed by the city, where they limit the landlords from taking an increase in rents. And by limiting that, they're not able to get revenue, to fix their properties. So they just say, "I'll let it be empty."
They abandon it. Or zoning usage and complications. You would think we have a client that has a vacant building. It's been vacant for years and years. And one factor is what you're asking for in price. Maybe that's why you haven't, because he's trying to sell it, right? But then the other factor is, well, what can go in there?
Exactly.
What business can go in there? And
exactly.
if a city is not friendly to businesses, then that building sits vacant for a long time. But you brought up a point about getting the quote the moment you open escrow.
Before.
Actually, in California, as part of the contracts now on the real estate contracts, you're a broker, I'm an agent. So we see this. They've implemented insurance as a contingency. So if you do open escrow and you can't get insurance on a building and you haven't removed that contingency, check with your agents and your brokers, but you have the ability potentially to back out of a deal because you couldn't get insurance on it. Just like you had the ability to back out on a deal if you had the loan contingency in place or appraisal contingency. Those are all protections for the buyer to be able to back out. Well, insurance was put into that. I want to say it was this year, 2025.
Yeah, I think so too.
Because of all the changes that have come in with the insurance companies in California. So, I just thought this topic would be interesting, and we're optimistic. We're not saying, don't. And actually what it does create more opportunity, because you have some people that will shy away from investing because of the insurance situation. Another thing that we spoke with a friend, accountant, about, which was, you had brought up the topic of when somebody dies. Let's say a husband and wife own property and they pass away. The children inherit that property. We're talking about California. They inherit that property, but they don't, unless you fall under specific, what would you call them? You meet these criteria, they're not able to keep the same property tax level as the parents did. It gets reassessed, right? So if the parents were paying a low property tax because they owned that property for a long, long time, upon the passing of both of them, unless there's specific things in place, the children who inherit it now have a higher property tax. Do they also have a higher insurance?
You're not a so upon absolute. I would say yes to that.
They have
Yes,
to get
yes.
a new policy.
Yeah, you have to.
So now
You have
because
to get a
title
new
has
policy because
changed,
title has changed.
so you have to get a new policy. So
Oh.
not only has when the parents pass away, the property taxes increase because it got reassessed, but also the insurance premiums are going to increase because
They're
there's
gonna
no
increase.
way you're going to pay less than what that policy was grandfathered in for. Prime example is one of the buildings that we're looking at. Their annual insurance premiums are $20,000 a year.
Yes.
We're assuming that it's going to be close to double on a new policy.
Yes.
So you have to factor that into what you actually offer because the return is much less.
Yes.
Anyways, I thought I would bring those topics up because, and we're not talking about massive properties either. One of the policies that we have, it's a 2,000 square foot building, and the insurance premium is $5,000 a year.
Oh yeah. Well, look, the fourplex that I own, I went from 4,000 to over 9,000 in a matter of 2.5 years or something like that. Okay, so it does take out, from your revenue. It is an important factor to look at. I'm very positive in terms of investment. I think that because of my core beliefs, the way I grew up, I will always try to invest in real estate. I like real estate. I love it. And I think that most people that have created wealth have done it through real estate. So I will always try to invest in real estate. I always look at it as my little grain of, salt or whatever, to improve upon the economy. Because when people buy real estate, you give a job to the plumber, to the carpenter, to the carpet layer, to the roofer, to the painter, to the guy that drops the walls, to the guy that does all the sheeting. So real estate,
The landscaper,
the garden, insurance guy, the realtor makes money. So buying real estate,
Yeah.
I believe, is one of the main wheels that carry all those cogs, right? That provide function for our economy.
Yeah.
And I think that if people hold back and revert from purchasing real estate because it becomes non-affordable now, that's going to hit the economy severely. And I'm not talking about just realtors, because in the last couple of years, our realtor friends are having a very difficult time. Okay? There's been a large exodus of realtors from the field because they can't make money. So keep a positive spin on it. It's, if like the old adage that says, if you think you can, you can. But if you think you cannot, you won't. You're right on both instances.
I haven't been in real estate as long as you have. However, what it seems to me is that during the years of 2020, 21, 22, 23, these years where rates were very low, interest rates, a lot of people, there was abundance, so a lot of realtors were doing well. Now that we've entered those years of higher interest rates, it kind of went back to maybe what it was originally, which is the top 10% do the 90% of the business.
You mean the realtors? Of realtors.
This kind of goes across most industries.
Actually, you're right.
The top 10% of realtors, let's say, do 90% of the business. So it's kind of, but in those years of low interest rates, it wasn't that. A lot more people were doing business. It was abundance. Now it's gone back to, and I might even venture to say that right now, because of the higher interest rates, it's even gone to like the top 5% are doing 90% of the business.
I don't know the stats.
I'm just kind of
right
based off of anecdotal what I've seen, because it is a challenging market. However, there still is opportunity, and I wanted to make sure that we leave a positive spin on this.
Of course.
But also a realistic spin, which you bring up a lot. You have to be aware of what's happening. And this is a real life thing that's happening, which is insurance premiums being a challenge to close a real estate deal.
Well, let me give you an example. The property that we're looking at right now, if you would have brought that property to me 10 years ago, okay, I would have put that thing in escrow in a New York second. Okay, I know the saying is a New York minute, but in a New York second, I would have put that property in escrow. Now that property is brought to us, and by our choice, we have not opened escrow because I just don't know where we stand with regards to the insurance. And it's a major issue.
Yeah.
Okay?
Which our intention is to
Purchase
open escrow.
Yeah.
Our intention is to, but that is a huge factor. And everybody's aware of it. The seller's aware of it. The brokers involved is aware of it. Everybody is aware that this is a major issue, whether it's going to be
with us or anybody else.
Correct.
So we're very serious buyers, and so might as well face it with us. You know?
Yeah.
We're transparent. We're very fair. They're transparent. They're very fair. They've really been.
Now, one of for somebody who isn't aware, one of the things that we tried doing is asking, hey, this policy is already with this existing carrier. This insurance policy is with this existing carrier. Is there a way that this existing carrier, this insurance company, can just rewrite it for us? And the answer is always no. We have never seen a situation where a grandfathered in policy that was written many, many years ago can just be transferred to a new
okay, so you said
owner.
Two different things. The policy that's existing for whatever property, when you buy or sell, there's a transfer of title. You cannot transfer that insurance policy.
Right.
That cannot be done. However, you still can go to the company that's carrying that policy and ask them, can you rewrite it? Now, when they rewrite it, it's going to fall under current guidelines. Okay? And the answer may be yes, I can, or maybe no, I cannot. Okay?
But even if it's yes, I can,
the premiums are going to be higher.
It's always higher.
No doubt about it.
So those are just things to take into account.
Absolutely.
Yeah.
Absolutely. Let me touch on something that you said. So let's say you have all your properties in a living trust and mom and dad pass away. All those properties get a step up in basis with regards to paying taxes.
Capital gains.
Capital gains. Okay. So they get a step up in basis. So you benefit from that. However, they do get reassessed as of the property value as of the time of death, and you will pay more property taxes if you keep the properties. If you sell the properties, you have the benefit that, because it was in a living trust, the capital gains, it's down to zero, right? But
it depends when you sell it and everything, but it gets they get a step
they
up
get
in
a step up in
basis
basis to the market, right? So if you sell it right away, you don't pay capital gains, okay? But
double check with your CPA, your accountant.
You double check with your CPA, your accountant. We're not either one of those, so we're not giving advice here at all, okay? And our podcast is free, so how much is a free advice? It's not worth anything, okay?
No, this is valuable because you have 40 years in the industry in insurance as an insurance company insurance agent owner,
right?
And then also as a broker. So so you have a lot of experience in it, and you've seen a lot of people pass away and what happens. They sell it, and with a good CPA and good planning and everything, the family usually sells it and doesn't pay much of any capital gains, which is a big deal.
It's a big deal. But if you wanted to keep the property, get ready to pay higher taxes.
Right.
Okay?
Property taxes, specifically.
Excuse me, property taxes, yeah. You need to put the first and last name on everything because, first of all, we're not experts at anything, and we have great intentions, but you got to check with all your professionals, your CPA, your attorneys, your living trust attorney, everything that you got going out there so that all the angles are properly covered with people that have little,
specialists.
little letters behind their name. All those little that they've studied so hard for.
Yeah.
So,
Yeah, like you want to have people like that, and hopefully we soon bring on a tax professional to explain some of these real estate, some of the benefits of real estate, because there are a lot of changes that are coming in with these, I guess, this new bill that came in, and where it makes real estate a lot. It brings a lot of tax advantages to owning real estate, especially for business or investment. So hopefully soon we can bring that gentleman on.
okay.
Anything else you want to throw in?
No, I mean, keep looking. Look, the answer is keep looking. It may take a little bit more time, or you may need to look a little harder, but you will find deals if you're looking. He who looks finds, And so you do your own little, push to the economy. The answer is not necessarily not buying. That I wouldn't suggest that to anybody, because I firmly believe that you can grow through real estate, but you have to be a lot more careful because there's a lot of additional expenses that come with it, and there's a lot of different angles. You need to also check with your city. Your city may have some form of request for you on that particular property. For example, there's a property that we're looking at for an investor, and the price seemed to be very good, but when we contacted the agent, they said, oh, look, you need to check with the city because the zoning will not be the same. So the current zoning on that property, it's going to be taken away. And so that's something that you need to figure out with the city. And so you need to check, different avenues before you pluck your money down.
I think having good people that you can rely on, that you can trust to advise you in these situations. And, we've encountered a lot where somebody who is a real estate agent who specializes, let's say, in the residential space, but is not familiar with the commercial side. And if you're not careful, it's not that they can't do it, but if you're not careful, you can either make a mistake yourself or hurt your client, whether it's the buyer or the seller you're representing. And
we've seen it happen.
We've seen it happen. So it's being very careful and bringing somebody who is knowledgeable in that space. Well, thank you for sharing your tips. All right.